Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been very good for the equities. But no matter what, we saw a little bit of tricky price action, volatility, choppiness. But overall, I think the sentiment is quite good, supported by some of the economic data that we are going to review. The November jobs report revealed a stronger than expected growth, 227,000 on a forecast of 20,000, 220,000. Yet, the unemployment rate ticked up slightly to 4.2%. This mixed data fueled market uncertainty regarding the Federal Reserve's future monetary policy, while the strong job creation suggests economic robustness, potential supporting market growth, persistent inflationary pressures, and hawkish Fed comments present counterbalancing forces. Inflation remains above the Fed's target, we all know that, but mixed signals from the recent data, for instance, the University of Michigan's one-year inflation expectations rose to 2.9%, exceeding the forecast of 2.7%. However, other indicators showed a more ambiguous picture. A significant increase in US consumer credit points to robust consumer spending, a positive but potentially inflationary factor. We are going to see later in Amazon price action that everyone is betting on a huge Christmas selling. Conflicting signals from Fed officials further complicated the outlook. Some express optimism about disinflation and the possibility of rate cuts, while others voiced concerns about persistent inflation, necessitating a more cautious approach. The absence of comments from Jerome Powell during this reporting period adds to the uncertainty. Geopolitical risk. Escalation tensions in Middle East and Ukraine add to the global tension and uncertainty. Critically, three things: the declaration of the martial law in South Korea, the no confidence vote against the French Prime Minister, and finally, the most interesting one for the US tech sector, China's sanctions on US companies introduce considerable volatility and uncertainty, potentially impacting global markets. So as we can see, we have a lot of things. I would like to highlight overall the basically the hawkish comments from and mixed signals from the Fed, basically, and also non-farm payrolls, unemployment rates, that the unemployment rate ticking higher, but the non-farm payrolls showing a strong, robust market, and the preliminary on the consumer sentiment it's ticking higher. So with all this in mind, and I think the overall sentiment of bullishness around the end of the year and around the Christmas period, I think it's why we saw this weekly candle of 3% on the Nasdaq. So we broke this final line of we got the 3-bar reversal here, and then we got the rejection here, and then on the weekly we are seeing a huge bullish candle. So what am I expecting in terms of higher time frames? I'm watching for continuation. Why? Because I think towards the end of the year, everyone is, including hedge funds, day traders, everyone is betting to have a green end of the year with consumer spending, with Christmas period. Amazon is showing that. Let me check that, 3% on the day on Friday, with 9% increase only this week. So this huge factor, including XLY, which is consumer spending, it's 2/3 of the US economy. Look at this. This is showing strength spending. And leaving aside the factor of increasing inflationary pressures, I think the equities are going to fly more. So with that in mind, on the daily chart, we saw a 5-day of a pretty good week of sustained price action to the upside, a little bit of pullback, and then on Friday, with the NFP unemployment rate and the preliminary on the consumer spending, I think this ended up being quite a huge breakout on the all-time highs. So I would like to really point out this daily volume imbalance, which is something we started the week off, and then one candle here, and then buying into the breakout of the first all-time highs, and then a pullback into higher all-time highs at 21,650. We ended the week. This structure is pretty bullish, and I think we all understand that. So we have to really adapt on that. We have to really take the advantage of this sentiment, of this structure, this price action to really buy the market. You don't want to short this market. On the 1 hour, we are seeing how we started the week in a bullish manner, then we grinded higher, we consolidated, and then on Friday we broke out again. This is huge. I think this is very important to really understand the higher time frames, because even though in the 1 minute we consolidated and Friday was basically an end of the week with holding pattern, we saw a little bit of choppiness on Thursday. Look at this. But overall, we have to really understand how this market is structuring, and I think it's structuring to the upside. We have Bitcoin really pushing 100,000, half dollar pulling back a bit. We have small caps really holding. We are not seeing too much on the breadth side. We are seeing all this consolidation in these last days, but we are seeing a clear pattern: higher lows and higher highs. So don't short this market and take the opportunity to really buy this market and enjoy the trend. I think it's really important to know what kind of market is this, and this kind of market, it's really positive and really encouraging you to buy some dips, adjust risk management from those dips, and then add to those winners. In terms of financials, XLF, it's seen a little bit of pullback, but I think we all see the trend on the financial sector. Semiconductors are also a little bit choppy. This is due to the China ban and China restrictions, sanctions on US companies. So overall, I think we all know that the Nasdaq can really destroy shorts. So don't be that guy. Be smart and take the opportunities to really follow the trend. I think this structure is pretty clear to really show you how the market towards the end of the year, it's really bullish. So levels, in terms of levels, we are at all-time highs. I don't have a clear pattern for that. We can see that, for example, this pullback, if we project that, we can see, oh, not here, 1 hour, that template, bear with me. So the visibility on this, okay. So sorry about that. We know that this kind of pullback that we got on early November points toward some kind of future levels. We have to think about psychological levels. I think the first psychological level is 22,000. That is going to be a huge move next week. And then we have, on this projection, we have the one projection, one starting deviation at 22,300. That's a really positive news, really positive number. And then we have the 22,500. I think this is the level we all want to see for the week. 22,500 would be insane. So I wouldn't think about two standard deviations. 23,000 is going to be insane. But I think 22,000, 22,300s, 500s are pretty doable. So I would like to see these kinds of levels. If we put the 500s as the maximum move on the weekly for next week or even the 2 weeks, I would like to see a retest of 21,500s perhaps, and then a clear bullish pattern towards levels like 22,300s 500. So I think we all have to really understand and adapt to this market. Uh, People that were shorting this structure here were slowly being burned, and at the end of the day, they puke, and we are seeing new all-time highs. So, with that in mind, be smart. Take this opportunity to buy the market. I think we are on a good end of the year pattern and price action to really take advantage of that opportunity. Look for setups to the long side and really enjoy following the trend. That's all from my side. As always, thank you for your time. If you found this video useful, remember that these are weekly recaps that I do every Saturday, recapping the fundamental, the economic data, and the price action with different points of view, different markets for all the week. But also, I do daily videos from Monday through Friday for daily forecast, market updates, and market recaps. So if you have a nice week, congratulations. You have the whole weekend to rest, disconnect a bit. That's really important. And remember, basically, that discipline, patience, and risk management are the key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.